Hello everyone, myself Dr. Rajyashree Zavde, Assistant Professor, DG College of Commerce, Satara. Dear students, today we are going to talk about financial management. As you know that finance is an important function of any business as money is required to meet various activities of it. It has given birth to financial management as a separate subject. Finance is considered to be the lifeblood of any business. It is defined as the provision of money at the time it is needed. All the plans of business may remain a mere dream unless adequate money is available to convert plans to reality. So, financial management refers to that part of managerial activity which is concerned with procurement and utilization of funds for business purposes. In the words of Howard and Turn, financial management involves the application of general management principles to a particular financial operation. So here we can understand financial management is concerned with estimation of the fixed and working capital requirements, formulation of capital structure, procurement of fixed and working capital, management of earning. So here we need to understand the scope of financial management. In significance, financial management occupies a significant place because it has an impact on all the activities of a firm. Its primary responsibility is to discharge the finance function successfully. That's why financial management is the appendage of the finance function. No one can think of any business activity without finance. The management may accept or reject a business proposition on the basis of its financial capacity. So here the finance function centers around raising of funds. Without finance, there will not be any business or business activity. There will not be any kind of business transactions. So the concept of financial management are applicable to an organization. So here nature of ownership and the control, it also matters over there. So if we talk about its definition, financial management is the activity concerned with planning, raising, controlling and administering of funds used in the business. Financial management is that area of business management devoted to a judicious use of capital and a careful selection of source of capital in order to enable a spending unit to move in the direction of reaching its goal. So, according to Massey, financial management is the operational activity of a business that is responsible for obtaining and effectively utilizing the funds necessary for efficient operations. So in this way we need to understand its meaning. We have discussed already in the last lecture. When we talk about its significance and the scope of financial management, we need to understand where and how the business transactions are going on, what kind of importance or what kind of elements are required to continue the business. So finance is the base of any business transaction. Finance is called the science of money. Financial management is the science of money management. So it is that managerial activity which is concerned with planning and controlling of the firm financial resources. So finance is very essential. Some theories of financial management are there. So if we understand its nature, its scope, we have to understand each and every aspect of financial management. So the objective of financial management are like this, no, they should be beneficial to owners, management, employees, and customers. These objectives can be accomplished only by maximizing the values of the firm through the following ways, like no, increase in profits, reduction in cost, source of funds, minimize risk. So all these are essential one. If we would like to understand the increase in profit, a firm can maximize its value through an enhancement of its revenue. The revenue can be enhanced through stepping up the volume of sales or any other such activities. So here even the reduction in cost. So increase in profit and reduction in cost. A firm should work by all means to reduce the cost of capital and to launch economy drive in its operation. Now, what are the other sources of funds? A firm can raise funds in various ways through several sources. So, here we need to understand raising capital, increasing profit, and minimizing the cost. So, here reduction in cost is essential. So, minimizing risk is very important. No risk, no gain in a common adage. So, here we need to understand in this particular discussion. So, here if we talk about theories, a group of experts says that financial management is simply the task of providing funds needed by the business or enterprise on terms that are most favorable in the light of its objectives. The approach thus is concerned almost exclusively with the procurement of funds and could be widened to include instruments, institutions, and practices through which the fund can be raised. It also covers the legal and accounting relationship between a company and its sources of funds. Financial management is certainly broader than procurement of funds. There are other functions and decisions too. Fundraising important, then its requirement, its development. So capital market, raising funds. These are not the problem. The real problem is to put the capital resources to efficient use through effective financial planning, financial organization, and financial control, and to deal with tasks like ensuring the availability of funds and allocating them for different uses. So, if we would like to understand nature of financial management, so it is an indispensable organ of business management. Its function is different from accounting function. It is centralized function. It is helpful in decisions of top management. It is applicable to all types of concerns. So here we have seen in the last lecture also the scope and the function of financial management. So we know. So it is related to raising funds through various sources at the national and the international resources, keeping in mind the cost effectiveness, investing the funds in both long term as well as short term capital needs, funding day to day working capital requirements of business, collecting on time from debtors and paying to creditors on time, managing funds and treasury operations. So there are all these are the essential tasks of the financial management. We have seen the scope of financial management. So if we talk about financial management, so financial decisions are important, investment decisions and dividend decision. So here these are the very important decision making or the financial management, these tools. If we talk about this financial management, financing decision or decision, so the financial management decisions can be categorized into investment decision, financing decisions and dividend decisions. These components of the finance function interacts among themselves through the medium of the cost of capital with a view to attaining the objectives of wealth maximization. Investment decisions, these are concerned about The investment of funds. Funds can be invested in fixed assets and current assets. Investment of funds in fixed asset has long-term implications, but immediate returns can be expected from investment in current assets such as cash, receivable, and inventories. The purpose is to identify projects which can be accepted using the discounted cash flow techniques, using the cost of capital as a cutoff criterion, and also to choose the project with high net present value or internal rates of return if the resources are limited. The investment decisions are also subject to risk versus return analysis, as future cash flows are subject to uncertainty. What is this financial decisions? Financing decisions are concerned with the financing of business activities. They are intimately bound with the investment decisions. The financing decisions are helpful in planning for a balanced capital structure. Risk, return, and control are the crucial factors relevant in formulating the financial decisions. We can see that various analytical techniques like EPS, ABIT, so computation, then the leverage calculations, and interest and dividend coverage estimates are used in the process of making financial decisions. Now we'll see the dividend decisions. What are these dividend decisions? Dividend decisions are concerned with the disposal of profit. Dividend is generally paid as some percentage of earning on the paid up capital. The internal profitability versus the external profitability analysis helps in developing the payout ratio. The part of the profits which is not paid out as dividend constitutes the source of internal financing. The cost of capital acts as the nucleus in the financial decision making. It has a two-way effect on the investment, financing, and dividend decisions. So it influences, and in turn it's influenced by them, as the cost of capital is the cutoff criteria in investment decisions. It leads to the acceptance or rejection of projects. The financing decisions affect the cost of capital, as it is the weighted average of the cost of different sources of capital. The need to raise or lower the cost of capital in turn influences the financing decisions. The dividend decisions try to meet the expectations of the investors reflected through the cost of capital. In turn, the expectations of the investors raise or lower the cost of capital. So here in scope, the financing decision compromises of financial planning and capital decision. Investment decisions comprises of a fixed capital management and working capital management. Dividend decisions comprises of a dividend payment policy decisions and decisions for flowing back of retention of surplus and profit. Therefore, nature of financial management can be judged by the study of the nature of investment decisions, nature of financing decisions, and the nature of dividend decisions. Now we will see the core financial management decisions. First is investment decisions or investment of funds, financing decisions or sources of funds, dividend decisions or distribution of profit. Investment decisions are investment of funds. So here when we talk about investment of decisions or investment of funds. So in investment of funds, the funds procured should be prudently invested in various projects. The technique of capital budgeting may be helpful in selecting a project. While taking investment decisions, the finance manager has to keep in mind the principle of profitability. liquidity, and safety. The principle of profitability should not be the only criteria of investment, because if the funds are blocked in unsafe projects, the solvency of the company will be in danger. That's why here is importance of good investment of funds. So, if we talk about all these investment, there needs special skill, special experience, special knowledge. Through that we can make profitable each and every transaction. So investment decisions means what? Investment decisions means deciding the quantum of investment out of available finance on long term basis as well as short term basis. We have seen this. So every study has to be conducted for the benefit of the company. Financing decisions, a sources of a fund. So financing decisions relate to raising finance from long term as well as short term decision. So these decisions for raising funds from long term sources are called capital structure decisions. Decisions for raising funds from short term sources come under capital working or working capital management. Financing decision compromises two decisions. Financial planning and capital structure decision. Financial planning relates to estimating the sources and application of funds. So here capital structure decisions involves identifying sources to raise funds. It also includes deciding whether to raise funds from external sources like issue of shares, debentures, bonds, borrowing from banks and financial institutions, or to raise them from internal sources. So these all things needs to be studied properly. Dividend decisions or distribution of profit. So when we talk about this, we need to understand that shareholders may demand higher dividend. Management may tempted to retain higher profit to meet business needs. So choice of how much profit be retained and how much be distributed, and therefore a complex managerial decisions are required over here. So I hope that you have understood today's lecture on the financial management, and I have referred all these websites and the book. That book name is Principles of Management and Administration by D. Chandra Bose. So I hope that you will study, and if there is any query or if you have any problem in this lecture, you can communicate me, you can ask me. I would suggest that please read the notebook and the books on this particular subject. So here we will stop. Thank you one and all.